What's up, guys? Welcome back to another episode of the BlockHash Podcast. Today, I have on the CEO of Coinchange, Maxim Galash, to talk about how they are an on and off ramp software infrastructure for FinTech companies of various shapes and sizes. It's going to be a very interesting conversation. Maxim, welcome to the show today. I'm super happy to have you. How you doing?
Great. Thanks for having me.
Yeah, before we dive in, I'm sure people would love to learn a little bit about you and yourself. Maybe tell us a little bit about your backstory and maybe what led up to you, doing Coinchange and kind of getting into the crypto sphere a little bit. What's your origins?
Days go long, years go fast. I don't want to go too far back, but I've done my electrical and computer engineering at UFT, University of Toronto in Canada. I live in Toronto. I had along my career of last, I would say 20 years, I was working since I was 16. I even tried being an entrepreneur when I was 7, picking up old bottles, going to the beer store, cleaning up the cars, all the regular spiel. But last 20 years I spent mostly in tech. So I had my professional services agency. It's still around. It's 15 years old right now. It's building BPM, ERP, CRM systems. It's like enterprise grade software development business, right? We have about 60 people there, and I'm still on the board, getting my dividends and overseeing a little bit of operations, not really on the management side, but on the quarterly board meetings. I did have a venture fund before. In 2011, we raised $10 million for BGS Venture. That was a pre-seed and seed fund, primarily focused on consumer tech. We did okay. There's a couple of good investments that are still private and around $500 million valuations. So after that, I started building my own startups. I didn't want to manage the funds. I wanted to build because I kind of got this entrepreneurship bug through that. We built about 5 startups. One of them we've sold to a Swiss-based business. It was a cannabis seed-to-sale platform. And after that, I started buying Bitcoin in 2017. I think the deep from 20 to 2, that was my kind of foray to crypto, and again through Bitcoin and Ethereum. The experience wasn't that robust to at least my product demands, and we started thinking about building the brokerage business in 2018, late 2018. So we got to work in 2020. 2019, 2020, we got to work building the platform. I found a CTO and a couple of other core members of the team. We launched a Coinchange business in 2021 to market. And since then, for about 3 years right now, we've been servicing clients globally with our brokerage as a service platform, earn as a service platform, and recently we launched a gift card off-ramp business as well as a service. So it's all embedded finance, but initial story started as a retail-focused business.
Did the inspiration more or less for Coinchange stem a bit from the lack of robustness from Bitcoin or other cryptocurrencies when it comes to on and off ramping and payments?
Listen,
and
I use TransferWise. I don't know if you're familiar with Wise.com.
Yeah.
It's like an international payment platform.
Yep, I've used them before.
Yeah, so very sleek, and they give you the true rate, they call it, when you exchange from one currency to the other. They give you a true rate close to market rate. So that never happens in Canada, by the way. It was 5 banks, an oligopoly here. It's like you pay, arm and a length for your banking transactions, especially on the Forex side. So that happened with crypto as well. So everybody were, crypto is USD denominated, right? Any trade. So everybody were like putting some spread into the Forex, Canadian to the US. People were putting some spread on top of the Binance price of the Bitcoin against the US as well. So you have like 2 spreads that are sitting in, plus you pay a commission on top of that from a provider, from a vendor, let's say like a CoinSquare exchange. So I didn't like that. When I started looking into the price formation and all the ambiguity around it, we didn't like that. So we wanted to build something very simple and transparent. I originally started Coinchange as a retail platform.
So what would you say makes you guys different, Coinchange? What's the separating factor from other on and off ramping solutions out there?
Yeah, I'll go a little bit back, right? So we had an idea going as a broker to market, a retail broker, and fixing that visibility, transparency, ease-of-use problem. It actually morphed a lot, and the market saturated, brokerage business raced to the bottom. Everybody wants no fee. very highly competitive, kind of a red ocean. You go out there and it's a fight for a client and for acquisition. So we pivoted from that business to the infrastructure. So providing Rails as an infrastructure provider to fintechs like wallets, exchanges, and other payment service providers. Plus, we had an earn business from the very beginning. That was a DeFi Yield farming business. So pretty much you get a very simple, like you don't see anything. It's an account, right? Everything else is taken care of at the back office and with the smart contracts. So that business as well right now is available as an embedded finance business, but we have a lot of transparency that we added. So like you can actually see on-chain transactions, you can actually see the vaults, and vaults have strategies that manage your assets, that are driven by smart contracts and data. So it's a very effective institutional type yield farming portfolios that are fully executed on chain, that are available through an API through a centralized partner. So that's, I think, our core differentiation factor, because there's very few players in that DeFi yield farm and institutional API business, and we choose go to market through emerging markets. So you don't service anyone in the US. Like it's illegal to sell yield farming products in the US to retail. You have to be a fund or SEC registered dealer, and you can get the registration, obviously. So we service emerging market fintechs. So wallets, exchanges, PSPs in Turkey, India, Colombia, Peru, Poland, you name it. So that's, I think, the differentiating factor is the go-to-market, the client that we target, and the product that we offer is pretty complex to build in-house, and it takes budget and time and mistakes to get to where we are. So they'll rather take it as a service than try to build it themselves. So plus the on and off ramp, it's pretty commoditized business as well. There's a lot of players. I won't say we're any unique. Yes, we can take a higher risk jurisdiction. Let's say, right, when Coinbase offering their Rails won't go to, I don't know, Mexico, or Mexico maybe, but Colombia as an example, or Paraguay. Right? We'll be able to entertain that business, and we'll be able to track and compliantly service that client. So I think that's the only kind of major differentiating factor on the on and off ramp. But on the earn side and the API and the go-to-market side with the DeFi earn product, I think that's pretty unique on the market today.
Yeah, it's definitely easier in certain countries, like the US, for example, to implement some of these things. So they already exist in other forms. But in countries like Colombia, for example, where I'm at right now, it's a bit more tricky. And banking history here hasn't been that good for a very long time, and so it makes regulators very nervous sometimes. Have you guys been able to find some ways around that in certain other countries, maybe Latin, maybe other places around the world, where you've been able to find ways to get those substantiated?
We offer a service, right? So service with a product. So we rely on the partner license. It's usually a SaaS agreement and SLA. So you have to have an ability to be a distributor for that type of a product to your end customers in your jurisdiction. Usually in jurisdictions like LATAM, there's a central bank who's trying to govern that activity, or there is a certain VASP type license that they can acquire. That's on the partner side to intermediate the regulator, right? And we will be managing and providing those vaults where they deploy their assets. And they're reporting through an API, the launch support, performance marketing support, but they are the ones that are responsible to be able to offer that product. It's like a stablecoin Circle, let's say. When you list a Circle on your platform, on your exchange, you have to be able to list a stablecoin in your exchange. Stablecoin Circle doesn't have to have a license in your jurisdiction. If they mint, let's say in the US, they'll have to have a license in the US. Or if they mint in Cayman, they have to have a license in Cayman. But if they want to mint in Europe, they have to be MiCA compliant, right? So it's all about the source of the mint for them, but the distribution jurisdiction is covered by the partner that lists their token. So same for us, like they have to be able to onboard those clients, offer that product on their platform, collect the deposits, transfer them to the vault, and then we manage the vault with the strategies that we deploy.
Do you have some existing partnerships, clients, companies that you're integrated with in Colombia?
I haven't really looked at our CRM system before the call, but I think there's a bunch of, like, Crypto Market is in Argentina, Transfer XO is I think in Mexico, M-Pasa, I think this is also Mexican. I'm not sure about Colombia. I think there's one right now. Economy, I think I can see a few in LATAM, but I don't really see the end jurisdiction BitSafe. Yeah. So there's probably a few. I'll get you a name afterwards, and I'll follow up by email.
What do your clients typically look like? Are they wallets? Are they exchanges? Are they online banks? What is the breadth of who you integrate with kind of look like?
Primarily exchanges. I would
Okay.
say primarily exchanges and custodial wallets, because it's a custodial offering, right? So they'll have to transfer the assets to our balance sheet and deploy to the wallet. It's a custodial. It's a centralized DeFi exposure. So they have to be able to get custody of the client assets on their own balance sheet first. So usually it's exchanges or payment service providers, payment platforms. Wallets to a lesser degree. We're building right now on a custodial offering for wallets as well. But in the wallet scenario, you touch the end client because they have custody of their own funds on the NPC wallet, as an example. So you have to be able to track the funds and identify them, right? And do a little bit of a different reporting and wallet management. So that's coming probably in Q4 for us. And we right now work with the custodial wallets, exchanges, and payment service providers, payment platforms. Neobanks is a payment platform as well.
And then you mentioned, you guys have yield integrations as well. What kind of powers that, behind the scenes? Like, do you use a certain chain for that, or is there a certain custodial method? I'm just kind of curious on the back end.
It's all EVM compatible. And right now, primarily on Aave, GMX, and Uniswap V3. Expand the protocol base, mostly blue chips, and it's all on chain. So it's all smart contract driven. So there's no people deploying the assets or traders. I think another interesting product that we haven't spoken about, it's a gift card off-ramp product. That's pretty popular with the wallets, because gift cards don't require deep KYC. They call it light KYC, like they don't validate your ID, but they ask you for some information. So they don't verify the information, but you still have to input that. And it's a privacy first off-ramp. So wallets like that. So Cake Wallet, as an example, is our client. We're doing integration with Ledger right now. It's very similar to BitRefill, if you've heard of BitRefill, when you can
I have
direct to consumer platform. If you have your Bitcoin, Litecoin, you can go and buy the gift card yourself directly. It's the same offering. You can call it BitRefill as a service. So we go to the same exchanges, wallets, payment providers, and tell them, okay, if you want to offer the gift cards as an off-ramp method to your end clients, you can integrate our system.
Okay. How does the gift card thing work? You just buy the gift card with crypto, and you take that gift card to wherever you use it, Amazon, etc.
Yeah, there's different types of gift cards. So there's closed loop gift cards, restaurant, gym, Amazon, Apple, right? Closed systems. And there's open loop gift cards. So like Visa and MasterCard. So you can spend them anywhere that Visa and MasterCard are accepted. That's why they're open. So the open loop, they're issued by the bank. The closed loop, they're issued by the brand. So we have direct relationships with either banks or brands or aggregator. Our system will route and find the best price. And then our distributor will sell that gift card to their end client. It's by email. It's digital. It's usually wallet compatible. And it's redeemable at the source, right? So if it's Visa, you can go pay where Visa is accepted. If it's Amazon, you can go to Amazon.
I want to ask you about the DeFi industry a little bit, since you're kind of providing some of the bones here for what a lot of these exchanges need, wallets need, and there's quite a dichotomy that's growing on whether or not it's good or bad to have decentralized exchanges alongside centralized exchanges, and what that can mean for the future. And kind of curious, what you think about the DeFi landscape right now, and maybe how that'll kind of continue to evolve.
I won't say I'm a degen, like a decentralized everything. I don't think that full decentralization also, like it's, full democracy, you have to have responsibility when you have full freedom, right? So the full freedom comes with the full responsibility. And when there's no responsibility, when people don't have a sense of responsibility, but they have a full freedom, the chaos happens. So I would say a lot of those intermediaries have to be disseminated, and they have to be decentralized financial services, not only in financial services. As an example, I invested in one rug product, rug startup, and rug. They do handmade rugs. Okay, and so you'll know there's 12 intermediaries from let's say Nepal production, hand production in Nepal to the end client in Los Angeles. There's 12 intermediaries, right? So it's not only financial services that have so much intermediaries and inefficiencies, right? But we're focused on that because we know that market. We are in that market, and obviously we understand a lot of inefficiencies here. So I think the lending markets, the payment markets, like stablecoin, adds a lot of capital efficiency to the remittances, right? While, let's say, hardworking people in Colombia have their father working in Miami during the week, and then on the weekend sending cash because they work 7 days a week. I mean, they can really go on the weekend. They have to skip a day and like go and pick it up, right? Because and then on the weekend, how do you get cash to them on the weekend? You have to have a credit line from a bank. You have to have cash disbursements. So there's a lot of inefficiency and ability to operate 24/7. So blockchain does that, right? And stablecoins do that. So a lot of different business models will be intermediated, and without even the retail customers noticing that. Just the backbone of the server infrastructure, the settlement layer, the transactional layer will be different at the back office, while the end customer apps will be the same. So I think decentralization is great. I mean, decentralization is great, especially in the jurisdictions, emerging markets, where people don't trust their banks. People don't trust their banks or governments, right? And they want to be sovereign with their own funds, not under their cushion, on their bedroom, but somewhere safe. On the blockchain. Blockchain is safe. So there's different benefits of decentralization and freedom of finance, but I don't think everything has to be decentralized. Right. So and I think the other ecosystems, I mean, if we talk about the blockchains, proof of stake, proof of work, Ton ecosystem is pretty good as well. I mean, is it good that it's pretty centralized because there's a founder that owns the business, right? Who's a billionaire, or it's bad? I don't know. Is it decentralized right now enough? Is there enough nodes? So, but there's a billion people who's using Telegram, right, around the world, and they're definitely going to get access to a lot of different apps that going to be used there. So is it fully decentralized? Probably not right now, right? But is it good that they have this distribution channel in place and will allow crypto to be mass market? Yeah, it's probably good, right? So I think there's always kind of a balance. And then like it was Ethereum as well, and Lido, let's say, that has most of the liquid staking tokens right now. Lido Foundation has always had this decentralization problem.
I also do think that, having some kind of guidelines, some kind of regulation, some kind of, things written in stone that we can all agree to is also really important for growth and innovation, or even around DeFi. Do you have any thoughts on, maybe ways we can go about having proper regulation in the future for DeFi to better balance maybe, things like KYC and AML and, concerns that most people might have with where money goes and how to protect people, but at the same time, not infringing upon freedom too much and allowing people to still be able to, feel it's their money and their value that they're moving around?
I think balance in life is important overall. How do we make sure there's balance and compliance and regulation around DeFi? I think there's quite a lot of compliance right now already in place by Chainalysis and some other KYC providers. So know your transaction. They monitor all the blockchain and all the wallets. Every wallet has a score. If the score is high, so you can accept funds from that wallet. If you're a centralized platform, or even if you're a decentralized, even if you run your own wallet, you don't want to accept something from a high risk wallet because your wallet is going to get tinted as well as high risk. What I mean, high risk, usually there's different classifications for the risk there, but let's say exchange got sanctioned by the US, like Garritax exchange in Russia, and you somehow do business or trade or remit with someone who had exposure to that exchange, received some funds from that exchange. So you have an indirect exposure to a sanctioned exchange in this way, and your wallet becomes a little bit higher risk than it was before. So same happens for the other wallets that touched upon dark web, pornography, stolen funds, different types of risk categories. So there's already compliance on chain. The problem, I think, not the problem, but the identification of the users of those wallets only happens within the centralized entities like Coinbase, Kraken, and nobody does disclose the identities without the formal police request or court order, as an example. So again, your identity, if you use Coinbase, is not getting sold on front, left, and center to the CIA or deep state. I mean, you have to do something wrong to trace that funds to you, to identify a client. Let's say quite often those centralized exchanges are used for off-ramping stolen funds. And then what happens, there's a police report, then there's a police request, and then the exchange will eventually dig into that and provide you the data on the user who actually accepted or transferred the funds out. The user, the investigation continues, right? So it's not like the blanketly will provide all the data for every user to the tax authority. I think not today, at least. Might happen, depending again on the freedoms that the US will try to impose, or the CRA or IRS will be conducting, any new tax obligations for those platforms. But for at least today, I think there is no need for providing the identification of the users and their holdings to the tax authorities. And again, I don't think it's really that scary. If you hold Bitcoin, you don't sell it. Who cares? At the end of the day, you can change your residency. But in the US, it's a problem, because even if you change your residency, you still pay taxes in the US. But US is a special case. But overall, I think it's not really that scary. You have to pay taxes. Everybody pay taxes, right? To a certain degree, if they see value and understand what. It's a personal, not personal, it's an obligation, but it's a personal thing. You can relocate not to pay tax and go to Portugal if you're a Canadian, at least. So I don't think there's so much scrutiny right now around, there's no travel rule on transactions. You can send wallet to wallet to anyone. They don't require you to put an address of the receiver like a bank would, a date, a name, an address. I think it's too much. And I think the compliance transactional part is already in place on chain with the risk scores and tinted wallets that are getting blocked. I think identity and sovereignty, that's kind of a tricky question. Do you really want to go through, just the feeling, given your ID, given your face? It's just I think it's kind of a more emotional barrier rather than you're trying to do something bad. It's just emotionally, okay, do I actually want to do that? Or I'll get my MetaMask and keep running in my browser. Mm-hmm. But unfortunately, or maybe fortunately, to be connected to a real world, you need to have an ID check, right? Because if you want to have real money on the card or real money on the bank, right? It's pretty much banking system, because cards are issued by banks as well. So if you want to get into the banking system, you have to provide an ID. So I don't think it's going to change. It might get even worse with a MiCA travel rule in crypto, and they'll equate stablecoins to a fiat transaction, and will require you to provide my name and my address when you're going to do a transfer to my wallet. That would be, I think, an overkill, but that's, I think, the only direction it can go. They cannot say, okay, less compliance, less regulation to crypto. No, likely more. And DeFi is a completely different beast, right? You don't know who you swap with at all, right? You just go to a pool, whatever funds are in the pool. That's why institutions are so careful, because there's no embedded OFAC compliance by protocols, right? They don't really stop transactions. They can't stop them. It's irreversible. It's done by the smart contract. So DeFi is a little bit trickier in this extent, and it's all kind of anonymized for the most part, except private blockchains and not open source. And I think that one also can only become more compliant and more regulated rather than less, right? So I think there will be, Ava has permissioned and permissionless. So there will be permission platforms and permission blockchains, permission protocols, and permissionless, I think, as a software. Again, it's more like a software that provides a financial service. So it's really, I'm not a regulator or a lawyer, so it's really hard to categorize that in a certain way, saying it's a financial service and it's a security, or it's a certain broker trade, or it is a software, and just a software that facilitates a certain activity through certain servers that happen to be distributed. So I don't know. It's an interesting question. We'll see how things are going to unveil, but I don't think it's going to get less regulated. I think the only way it's going to get more regulated, and it's a fine balance between what regulators want and banks want, let's say, and what consumers want at the end of the day. So it should be somewhere in between, to my understanding.
Looking at past cycles, within this industry. A lot of that demand, I think, in the past has been driven through the United States, some of it through Asia, some of it through Europe. There's a lot of new markets now that are starting to grow and attract a lot more attention and volume into this industry, and kind of putting money in and starting to invest for the first time. And you're starting to see infrastructure-based use cases and companies going in places like Latin America, Africa, Southeast Asia, different parts of the world. You guys being, working globally and integrating and partnering with companies globally, with what you do, are there any markets that you see that are very interesting that might surprise a lot of people as adopting crypto, DeFi, FinTech, blockchain, and maybe starting to emerge as very favorable countries to operate in?
I think there's quite a few that trying to leapfrog. Some of them were forced to do that. Let's say with the Ukrainian war, right?
Mm-hmm.
Ukraine is an example. They were forced to use crypto, right? So bank controls, travel rules, travel controls, currency controls. And the only way they could actually move their funds out, if they're immigrating out, if they're running out to Poland, to, I don't know, Moldova, like all those countries that are close by, it was through crypto. So some people were forced to do that, and then their adjacent countries are starting to use more crypto as well because of the same problem, right? Because of the same dynamic. So Poland started to use way more crypto, as an example. We have quite a few large partners there, and it's all remittance based, and it's all on and off ramp based. Czech Republic, Moldova, the Eastern Bloc and adjacent countries to Ukraine that border Ukraine, Russia, Belarus, obviously. So some of them were forced into the global trade through crypto, right? So when the dollarization happens or the sanctions happen. So, and a lot of those flows go through Dubai, as an example, right? Same Brazil, Argentina, they trade with China. Quite a lot happens through stablecoins, through also Dubai, let's say, route. Turkey is the big one. Like their population, I think it also got forced through the war and immigration from Russia and the Russian capital, and a lot of global trade that kind of got centered between East and West there. So those things are like big global events that force people and businesses to adapt. And it's not like they're bad people. They're just living and immigrating and traveling and trying to find a way to live in the new place, to the business in the new place. And there is like lowest hanging fruit is crypto. Or they find a partner that trade against or provide services for, and they say, okay, we'll pay you crypto right now. So it's like the capitalism system, and the global distress made crypto a little bit more mainstream in those jurisdictions and in those geographies. But I would say overall, the innovation still comes from the US. I mean, in terms of the protocols, engineering, development, quite a lot of that is in the US. It just goes global. We're not really have a lot of visibility into Asia. Asia is I don't have a pulse of the market in Asia, but I think they have a pretty interesting dynamics there. I mean, clearly they've been at the forefront of a Web 2 FinTech with the barcodes, with the WeChat payments, and a lot of other technology that enables instant payments and light KYC transactions. And they also leapfrog right away to the phones, right? So, and a lot of it happens on the phone. So I think US system is there's a huge penetration of crypto in the US, obviously, but I still believe that it's more internal rather than outbound. So a lot of that is trading, origination, institutional ETFs, rather than real consumer, product adoption. Because there's a lot of USD investment products in US right now. Treasury bills is a very simple one. There's many money markets. There's many dividend stocks. There's many things that you can invest in to get returns on your passive capital. But in the emerging markets, they sometimes can open a USD account even in the bank. So, and then if they won't get any more than 1% interest on that USD, because USD is so much in demand in the emerging markets. There's not enough dollars, by the way, in the emerging markets. Everybody's saying the dollarization, there's just not enough to pay the debt because they're all indebted to the US for the most part. So USD is hard to put your hands on, but stable coins are also pretty expensive, but it's easier and it's more sovereign. and you don't have to trust the bank. You have to trust like a crypto intermediary or your own wallet. So we see higher adoption of obviously a DeFi investment product, a yield product, and the emerging markets where the retail that touch our product or a partner don't have access to an interest account at the bank or T-bills at the bank. So I think that's clearly the angle in a lot of LATAM countries, as an example. So where it's still pretty dollarized, they still believe in the dollar a lot. They have no better alternative than the dollar, but they can't really earn anything on that. So they're trying to get a hold of some products that are available.
Looking at the second part of this year, what does your guys' roadmap kind of look like for Coinchange? What are some things that you guys are doing? Do you have new products or services you're aiming to roll out? Are you going to any events, any conferences? What's kind of on the agenda?
I think the big one for us is a non-custodial access to our vaults. So right now you have to use us to deploy to the vault and manage on the vault, but eventually we'll give direct access to the vault for our partner. Some partners want that, some partners don't. Again, like wallets want that primarily because they're non-custodial, and MPC, they don't want to touch any funds. And some partners don't because they want to have us as a counterparty with a liability, with a balance sheet, with the agreement in place. So, but we're rolling out a non-custodial access to yield vaults. That's kind of a big milestone for us, and we're doing the smart contract audits right now. It's not going to be a fully open protocol, still B2B, but will be, again, B2B2C. The end clients, consumers get access to that anyways through a partner, but it's going to be a B2B client for us. So that's a big one. On the events right now, there's a couple of members of the team is on the Brussels right now on the Ethereum CC. The next one would be Token 2049 in Singapore. That's probably where we're looking to sponsor a couple of events there and invite our partners. We usually try to do like a side event, dinner, a cocktail party, something on the side event on the big conference. And I think I don't really see past that. I mean, August is kind of a vacation month. September, that's going to be the first big conference there. And release of the non-custodial is probably November, I would say. Like we'll release it by the end of the year to a couple of partners and roll it out more to market next year.
Interesting. Do you have any dev resources on your guys' website or any repositories if they wanted to get access? Maybe they're a partner, maybe they're integrating into you guys into their company or their FinTech. Where would you direct them?
Yeah, I think the website has a lot of information about the strategies, the allocations. We have a benchmark report. We have asset allocation reports. It's all under the research section. We have a sandbox on the website. We have integration guidelines on the website. There's also a way to request a demo on the website. So I think website is pretty good source of information. And obviously follow us on Twitter, coinchange.io, and follow me, Maxim Galash, Max Galash. So that would be also a good source of wisdom as much as I have it.
This has been a really good episode. Learned a lot about what you guys are doing in terms of putting together these rails on and off ramps. I think it's very fascinating. And the fact that you're doing it globally too is, hats off to you. I know it's not easy. So thanks for taking the time to come on and, dive into some of the details a bit more about Coinchange and about the market and about DeFi. It's been a good conversation.
Listen, the pleasure is all mine. Thanks a lot, Brandon. Appreciate it.